Good morning, friends at Ceda Realty. This is Kelly Decker, your mortgage pro. Today is Thursday, the January 16th, and we're going to try something new here in 2014. We're going to do weekly video updates. I appreciate your feedback on these. Let me know what type of information you'd like to see in these videos, but we're going to give it a try for 2014 and see how it goes. I wanted to give you an update last week. Major rule that came down called the qualified mortgage rule. The intent of this qualified mortgage rule is really to for lenders to make loans that borrowers have the ability to repay. Great idea. I agree with that 100%. Some of the key aspects of this rule are that the debt-to-income ratio is going to be capped at 43%, and the total fees that the lender can charge are going to be capped at 3%. As long as the lender makes the loan that fits into this category, they are granted what's called safe harbor, and it will protect them against any future lawsuits that might happen down the road. There will still be loans made that do not fall into the qualified mortgage rule and that receive the safe harbor, but they will be at a higher interest rate. But right now, what we're seeing is that the automated approval engines that provide the approvals for conventional as well as FHA loans are still granting approvals higher than 43%. And we can still do those loans, and we still are able to classify those as qualified mortgages. Typically we're seeing those with stronger borrowers that have great credit, a lot of reserves. I think over time that the automated approval engines will be tweaked where we probably won't see as many of those, but right now we are still getting some of those approvals. The 3% cap and lender fees really isn't an issue. The lower loan amounts have a slightly higher cap when you get below $100,000. I think it'll impact mortgage brokers more because their yield spread premiums end up playing into that. The key takeaway really for you as agents is to get your clients pre-approved up front. We're going to take the time with them to make sure that they're shopping in the right price point, and that we are definitely in line with the debt-to-income ratio. If I know that we're going to be close on things, I'll definitely let you know on that. Mortgage rates, the mortgage market. Last Friday we saw a big miss in the expected jobs report for December. Expectations were for it to come in close to 200,000. It came in around 70,000. It has forced a momentary dip in rates, and I want to stress momentary. I do not see this being a trend. It is a short-term retractment in rates. 30-year fixed rates right now in the 4.375 range, 15-year fixed rates 3.375 to 3.5% range. I see this as an opportunity as you as agents to move some of your buyers off the fence. Let them know that now is a great time to get a rate lock, to get a home under contract because of this momentary dip in rates. The overall trend for 2014 is rates to go higher, and we'll cover this in greater detail in another video. Have a couple thank yous. I want to thank Sarah, David, Celia, Tiffany, and Micah for recent referrals or contacts with us. I see 2013 was a good year with what we've done with Ceda Realty, and I think 2014 has an opportunity to be even better. Please give me a phone call, shoot me an email. Let me know how I can be of service to you and your clients. And again, thank you to the folks there at Ceda Realty. We appreciate what you do for us, and let me know how I can be of service to you.